with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. The annual Central Economic Work Conference has been held in Beijing as Chinese leaders chart economic plans for the year 2025. President Xi Jinping delivered a speech at the conference. During the meeting, Chinese leadership highlighted this year as pivotal in implementing China's 14th five-year plan, adding that China has made solid progress in high-quality developments, and it is about to accomplish this year's growth targets. The meeting also made clear the external environment has exerted a more adverse impact on China's development. However, the top leadership emphasized the long-term outlook has not changed, urging stronger confidence. It called for more efforts in high-quality developments, deepening reform and opening up in a modern industrial system in 2025. It also urged more proactive macro policies to shore up domestic demand, integrate tech innovations into industries, and to stabilize the property markets. So what's the current state of China's economy? What are the major tasks set for the next year? For more on this, join us on the line now are Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. So, Professor Qu, I will start with you. What do you think is the most important policy signals of the Central Economic Work Conference this year?
Well, I think this conference is very important. So basically pointed out many targets, many directions very, very clearly. Number one, I think when you pay attention to is that for the first time, I mentioned that we're having a very difficult situation right now, especially from the outside world. Internationally, we're facing lots of challenges, and also domestically, we're also facing some hardship. So I think the central government really, understand what's going on in China and in the whole world, and they do think there is a great challenge ahead of us. So I think in order to cope with that, second key point they mentioned in this conference is that we really need to use, very unconventional policies and measures to cope with the situation. The challenge is getting harder and harder, so we need to work harder and harder. That's the reason why you mentioned we need to have the unconventional policies, fiscal policies, financial policies, as well as the comprehensive integrated policies to fight against the current hardship and the difficulties. And I think third very important key point is that they mentioned several important areas that we need to pay attention to and really focus on in the next year to come. That is number one, I think, is consumption. I think this is for the first time also, we mentioned very clearly the consumption and how to create the domestic consumption is the number one priority among all in the next year's economic work. Usually we will say it's like high tech, it's like saving the small and medium-sized enterprises, and way longer before that is usually the agriculture's number one priority. But now we say the consumption is the number one priority. So this is actually a very important change. And I think secondly, they mentioned very clearly about the solving the domestic, risks, for example, in the key areas. And this time is also different. Instead of mentioning the risks in the capital market or in the assets market, they mentioned very clearly that we have to stabilize the stock market and housing market. And also this is for the first time, they mentioned very clearly about the concrete target about the stabilization. And furthermore, we mentioned about how we can guarantee people's livelihood. And clearly, they mentioned about the policies. How can we guarantee people's, employment, guarantee people's social security, and also help people with more of the children. And this is very clearly a direction pointed for the next year's work. So I think all in all, I think this conference is not only trying to set up the overarching policy design for the years to come, but also setting up a very clear, measures, very clear targets about what we're going to do in the next year. So I think they're going to point out very important, a drive for the next year's economic growth.
So Yan, what's your main takeaway from the meeting?
my main takeaways are two. One is I think I agree with Professor Chu. I think there is a clear recognition in terms of the economic challenges, in terms of domestic demand, but also very complex external environment. But at the same time, I think there has also been an emphasis on the long-term potential of the economy and also a firm commitment to that high quality growth. So the understanding that China has been undergoing this profound changes in terms of the speed of growth, but also in terms of the economic structures and also the different driving forces of the economy. So I thought to start, this is a very decisive, very thorough, a very, clear understanding. And second, I think I agree. I think the government has come up with a really comprehensive, in terms of the policies. They talked about the unconventional counter-cyclical policies in the short term, more proactive fiscal policy in terms of expanding deficit to GDP ratio, issuing more special purpose bonds, but also moderately loose monetary policy. And so my reading of this is not just the continuous, lowering RRRs or the interest rates, but also like what they did earlier this year, setting up special funds to support the housing market and the stock market. So these are countercyclical measures in the short term, but then they also talked about some of the long-term structural reforms, for example, the reform of the SOEs, the reform of the fiscal system to give the local governments more fiscal autonomy. They also talked about, social safety net to boost it, and so on and so forth. And so I think in terms of the policies, it's clear that this is not going to be just countercyclical measures in the short term, but also continue with the long-term structural reforms. And I think that would really help to support China's growth momentum in the long run, and also support its structural transformation.
So China will have a more proactive fiscal policy going forward in the year 2025. So Professor Chu Qiang, how do you expect that to be implemented by institutions and local governments? And what will be its impact on Chinese economy?
Well, I think many measures has already been in position. If you want the local government and if you want the integrated policy has been implemented, number one, you need the resources. I think the resources has already been announced by the central bank, by the NDRC, and many related authorities. We have issued a special bond of this year, about 900 billion yuan. And also in the next year, we're going to looking forward to another times of that, for example, 4 trillion yuan ahead of us. And also the central government mentioned it very clearly about that the deficit ratio is going to be absolutely more than 3%. It probably is going to be around 4%, even higher. So I think central government has been really determined to say, okay, we know it's going to be very hard ahead of us. We don't know what's going to be like in America to have the policies against China. We don't know what's the geopolitical conflict is going to evolve in the Middle East and how it's going to infect the global international demand and international trade. We don't know about that. But what we do know is that what we can do with our own economy. So that's how we're going to do the things. We're going to push in all kinds of the resources that we have, and until we see the results. And that's the deal. So I think the resources definitely at the hand of the central government. And because I think China right now only have about integrated or comprehensive debt ratio about 60 to 70%, which is very, very much lower than the average OECD countries, is more than 120%. So I think we still have the leeway to do so. And more than that, I think the fiscal policies will also play its role more than ever. Which means they're going to have more of subsidies towards the people's livelihood, toward the families, towards the local government. So I think that's the reason why, and I think that's the bottom line for the local government and also the local enterprises to have a more proactive, move of the next year. And also, besides that, I think we have more of the integrated policies. For example, like the Social Security, like the pension fund reform. This is also very important to introducing more of the resources to prop up the pension fund. So people well, change their expectation next year. And also the local government will also be untied with their hands in the medical insurance, with the pension insurance, and etc. So they will have the more insurance, they will have the more resources in their hand to focus on how can they create jobs, how can they support the enterprises. And more than that, I think there is a special mentioning about how we can support the enterprises of the next year. And also the central government will spare more of the resources in that regard, especially the high tech, the little giants, the two new related enterprises. So I think these are what we call the tribune that can rouse the morale in the local government, and when we can actually implement all these policies.
And so, Jiahe, the policy tone on boosting the domestic consumption is also quite strong. So, what policy tools does China hold or could utilize to stimulate the consumption effectively?
Well, currently, when we look at the Chinese economy, the consumption is taking up a relatively smaller percentage compared with developed economies. And it is a trend, if you look at global economic history, that when a country is growing very fast, it usually has a lower amount of consumption because people were accumulating their wealth into things like investments and fixed income, all these kind of things. But when they have more wealth to spend, which has happened in many, many economies in the past, especially those economies like South Korea, that has been led by the government investment, is that when the people are having enough money, the consumption will start to pick up. So this is exactly what is going to happen with China in the next at least 1 to 2 decades. This is a trend that we will keep on seeing more and more consumption. And the government is definitely realizing this, and they are utilizing this trend as well. They are trying to boost the domestic consumption in order to increase the support to the overall economy. I would say that if you look at the biggest potential of China's economy in the next 1 to 2 decades, it comes from the domestic consumption. That's for certain. And if you look into details, there has been many actions being taken and will be taken in the future. For example, the Old for New program, that's government give a certain kind of subsidy that you can replace the old home appliances in your home, and the government will give you a subsidy if you do that. If you for example, buy a new air conditioner and replace your own air conditioner. This not only increased the consumption, which has been increasing the consumption by a very large extent, but it also helps to save the energy because the new home appliances equipment saves much more energy compared with those equipments that were bought like 10 years ago. So this has actually achieved a pretty large success. Also, there are many other things. For example, in the latest economic meeting, they have mentioned that they will increase the pension for people. The reason that people are not daring to consume in some cases is because they worry that they have to, accumulate money for their old days. So they say, okay, I'm not going to consume that much for now. But if the pension system is increased and people are more comfortable with their pension after their retirements, they will start making more consumption at this very moment. So all these things are helping China's consumption.
And so, Professor Qu Qiang, actually, the housing market has been showing signs of stabilization already from the incremental policies which started in September. So, what are you looking for in terms of further property market support?
Well, I think for the further property market support, I think we have already got many of the financial facilities established of this year are basically targeted to the stock market. I think the government are trying to do an experiment because the stock market is much smaller in China as an asset sector. I think right now we have been establishing the facilities trying to help the brokerages, insurance companies to, borrow the money from the central bank and to stabilize the stock market. And also, I think the central government will issue further bonds to help the local government, number one, to purchase back a lot of the newly built houses, or to help with the developers to help them to finish the houses, which is nearly finished but not yet. So they can close up their circulation of the financial flows, and then to make sure that all these circles in the value chain in the housing market can be revitalized. And also more of the housing probably can be rented out through the government to the low income groups, so that the housing situation can be improved, and also the government can get a certain cash flow. And meanwhile, I think the house prices can be stabilized because of the government's operation. So I think through this policy combo, next year we're going to look at the housing market, the basic housing market can be stabilized, and furthermore in the bigger market, and we just see many of the data is coming out that the housing market has been going up very warmly and slightly at the end of this year, and I think next year we're probably going up or zigzagging at a rather higher level than this year of the next year. So I think this is probably what we're going to see and do for the housing market, because housing market is the largest assets category affecting people's expectation, and further will impact to all the consumptions. So I think we're going to expect more to come of next year.
And Jiahe, so for China's stock market, people are hoping for a steady bull market. So what do you think this round of stimulus measures will do to China's stock market, and how could it drive the consumption or help to drive the consumption?
Well, this year we have already saw that China's stock market has undertaken a very good market. I mean, it's not only that you can see from what we call Shanghai Composite Index. I think it increased by about 10 or something like 10 or 15% this year. But basically, if you look at companies with small caps, they have actually been increasing quite a lot in recent trading days. I have seen there is an index that's called low price index, where many retail investors actually throwing their money into, and this index increased, I think, by about 40 or 50% in the past few trading days. So that's actually a lot of increments that we have seen, and this will definitely bring more power to the consumption, because this is something in economics or investment we call the welfare impact. That is when people are getting more financial income from things like stocks, property market, they will dare to consume more. I mean, one reason why China's economy has been showing a slower pace compared with a few years ago is basically because the property market has come down. And people started saying that, okay, I'm not having that much money because my house has been dropping value, so I'm not consuming that much. So this is something that the stock market is doing in reversing this trend, that when they find out that their stocks actually going up, they would dare to consume much more. Actually, if you read the paper published by the economic meeting this time, the first paragraph telling about what we are going to do next year is increasing the consumption as well as the investment return. And that's why they are putting this, because investment return does affect the consumption behavior.
And Yan, so what do you think is the external environment for China's economy? Actually, China will expand the high standard opening up and stabilize the foreign trade and investment. So how important do you think this stance of openness from the world's second largest economy for the global economy?
All right, this is an excellent question. I think, again, the Chinese policymakers realize that with the new, President-elect Donald Trump in the White House, right now he's pledging for 60% of across-the-board tariff increase on Chinese exports to the United States. Now, that could be just, a campaign pledge, and it could be just a bargaining chip to get more sort of deals from China. But still, I think, we need to remain vigilant in terms of policymaking and to support domestic demand to compensate for, this uncertainty coming from the external markets. That said, I think China has been in the past few years, reduced the reliance on the United States market directly. So I think, China has now also export a lot more to the global south, to the BRICS countries, for example, are now more than, what China exports to the EU, the US, and Japan combined. So I think, China is in a good position to protect itself from these external volatilities. But at the same time, I think you're right. China is going to continue to move towards high quality opening. And I think in the recent, months, we have seen a slew of policies. Right now, China has been given, visa-free, which is a unilateral kind of offer to 38 countries. China also has just lowered or actually removed all the tariffs, for the 33, the least developed countries. And finally, China is opening up more for the service sector, as indicated by the World Conference, that China is going to continue to orderly open up the service sector, including telecommunication, healthcare, and also education. So all these indicate that China is going to continue to embrace the high quality opening and to integrate into the world economy. Now, this is not only good for China, right, by introducing more competition, more technological sharing, but I think it's also great for the world as the world is battling with climate change and also with economic recovery from the COVID. We need to have a more multilateral and open system to facilitate trade and investment instead of having the protectionist policies like what the United States is moving towards.
So, the meeting also emphasized fostering the new quality productive forces driven by science and technology innovation. So how important is that? And what do you see in terms of the resilience when it comes to China's high-tech manufacturing sector?
Right. So I think promoting high quality productive forces is very important to support a high quality development, right? High quality development basically means that we need to rely more on productivity growth instead of the more sort of the capital or labor input driven kind of growth, which was China's old growth model. But as China now moved into the middle income country, and also as we know, from 1960s to now, out of over 100 middle-income countries, only a dozen of them were able to move up to that high-income level country status. So for China, it is paramountly important to boost productivity growth. And so promoting the high-quality productive forces means that, for one, we need to cultivate some of the emerging future industries like AI, like quantum computing, like Internet of Things, and advanced manufacturing. And so these would really help to promote technological innovations, which then will help to boost total productivity growth in the rest of the economy. And China also has been talked about, we need to balance these new productive forces with the old, meaning that for some of the traditional sectors, we also need to use, for example, digital technologies, green technologies to upgrade this more traditional, manufacturing or service sectors. And so I think this is important for China to cultivate the continuous and sustainable growth going forward. It is also very important, I think, to boost living standards as these, high productivity growth would produce high productivity jobs and also high paid jobs. Now, finally, I think, as you mentioned, in terms of resilience, we understand that, the United States and its Western allies are really trying to contain China's, technological development because they are concerned about, China's technological prowess is going to displace, right, the US's technological leadership. And therefore, you see a lot of the containment policies, for example, banning, the US high-tech investments in China, also banning the exports of high-tech, especially, cutting-edge chips to China. So I think that means it's even more important for China to be able to invest domestically in these high-tech sectors to promote more indigenous technological development, not only continue to develop its own economy, but also I think benefit the rest of the world by, sharing green technologies and so on and so forth.
So Jiahe, so are you optimistic about Chinese economy and how do you project it to grow in the next few years with the policy support, the institutional support, and so on and so forth? Because some people say talents, market, and supply chain can make China competitive. What do you think of it?
Well, I would say I'm very positive about Chinese economy. It's not by my words, and it's by my investment accounts. Because as an investor, I've been 100% investing both Asia and Hong Kong markets for years. I never left the cash for more than 1% on my accounts, and the investment return has been pretty good in the past few years. It's been about 15 to 18% annually in the past 5 years. It's my money that's saying that I'm positive about China's economic growth in the future. And the reason that I'm so positive about China's economic growth is basically because China's per capita GDP right now is only about 13,000 USD. And if you look at the comparable countries like South Korea or Japan, we're talking about like 30 to 40,000 US dollar per capita GDP. So that's the level that China's economy is going to be. So you see there is like 3 or 4-fold increase in the next few decades. So you have enough reasons to be positive about China's economy. And especially when you mention about supply chain, that China is currently the world's world's most important center for production, manufacturing, supply chain, all these kind of things. You can't leave this country and find a replacement. I mean, some companies has been trying to find replacement in other countries like South Asian countries. But what they have found is that the other countries are actually having much smaller economic scale and much less developed infrastructure. So moving factories and supply chains out of China is very unprofitable for many businesses.
Mm-hmm. And so, Yan, since 2008, China contributes to around 30% of the global growth every year. So will China continue to be the driver of global growth?
Right. I think according to the IMF projection, China will still contribute to 22.6% of the global GDP growth in the next 5 years. And just put this number in perspective, this is a rate that double the amount of the contribution coming from the United States. And we also see a lot of estimate that every 1 percentage point increase in China's growth will lead to a 0.3 percentage point growth in other countries. So I think that just attests to China's significance in the global economy. And again, I think it's not only in terms of the quantity, right, how much China is able to contribute to the global GDP growth, but also really China's contributions in that green transition in the global economy. And I think that is very important because as right now, China is accounting for 60% of the global EV production. China is also the largest country that install the renewable energy capacities. China is also invest the most in the green economy, way more than the US and EU combined. So I think these are really the qualitative contribution China has to the global economy in terms of promoting more climate-friendly growth, but also really help to level the playing field in the sense of reducing the growth disparity between the global north and the global south.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, and also Chen Jiahe, Chief Investment Officer at Novum Archi Technologies. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.